I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have Naveen Agnihotri, CEO and co-founder of Cumberland Labs. Naveen, welcome to the show, and thank you for taking the time.
Thank you so much for having me.
You're very welcome. Excited to dive into your expertise in incubating Web3 startups, what makes a good Web3 company, a little bit about AI as well, which I know you have a background in. And speaking of that, let's just, before we start into current events, I'd love to hear a little bit on your background, blockchain, business, AI, and then we'll dive into everything Cumberland Labs and blockchain.
Absolutely. So I have a varied background. I have a PhD in computational neuroscience and AI from Columbia University, after which I was a scientist at MIT. I left MIT in 2005 to create an AI startup that really became a series of AI startups where basically the idea was, here's an amazing technology. Can we apply it to the public domain? Can we do some good with it? Can we apply and solve real world problems using AI? Right. So one of those companies actually became big. It was called Lendo, it was a fintech company where we were using AI to help assess credit risk for young people. And that sort of brought me closer to fintech and closer to sort of the technology that was around that would ultimately become blockchain. That where I bought my first Bitcoin in 2009, actually 2010, and sold it as well. But the point, so it was fascinating to see blockchain as a technology grow up through the 2010s. And we finally began to dabble in it at my company in 2018, 2019. And I exited out of that startup and connected with Don Wilson at DRW. And together we began this incubator, Cumberland Labs, where we said, it's an amazing technology. What interesting things can we make with it? And let's start an incubator where we do that. So that's really what Cumberland Labs is. It's the genesis is in taking technologies that are sort of very, very cutting edge, blockchain, AI, and solving a real world problem. That's really what the focus is on.
Wow, very cool. And it sounds like you've got into AI pretty early. I feel like we're going to circle back into that because one of the use cases and narratives of blockchain, at least in 2023, has been finally, I think the light turned on with ChatGPT, sort of realizing, hey, this is a technology that's a little bit ready for more mainstream adoption and also can be potentially combined with blockchain for even more benefits. But there are, since you got involved and since 2018, there's been an expansion of different use cases in different industries that are now able to start understand the potential of blockchain and start integrating into those industries. And with you guys incubating all these different projects, you must be well aware of all the different industries and what are sort of the barriers to entry, what are the first use cases that will actually penetrate into the market and where blockchain is sort of starting first.
So yes, absolutely. I wrote my first neural network in 1992. Yeah, so I've been doing this for a very, very long time, before a lot of your listeners were probably born. Yeah. So the use cases of AI, I think, and broadly of technology have always been tricky to identify early on, right? I was around in the 90s and watching sort of the internet come up of age and looking at the internet. And I remember being part of conversations in the 90s with people where people were like, so what can we actually do with the internet? And honestly, I didn't have very good answers because, online shopping was sort of a horrible thing in the 1990s. You couldn't barely get online. You had this modem that you had to log in on, and it was just really cumbersome, really horrible, right? There really was not that much good you could do with the internet in 1996, right, or 1998. You really couldn't imagine a service like Uber or a service like Facebook or or Airbnb, right? The advantages of the internet came much later. And it's difficult to predict these things, right? So it's something similar with blockchain as well. You can see the potential of the technology. You can see the potential of creating a way in which you can publicly identify a fact, right? I can publicly identify the fact that Ashton owns this thing, whatever this thing is. And there's all kinds of benefits to it, but it takes a while for the benefits to permeate and for us to be able to create products that are widely useful and people are comfortable using, right? Because onboarding is an issue. There's all kinds of things that we have to tackle with blockchain. Similar, by the way, to how we tackle it with the internet.
Mm-hmm. Yeah, that's a great point, and I feel like you're probably seeing some synonyms of that internet days when it's like, well, what are the use cases? You know, there's a lot of things that people are trying, but it's going to take a few years for them to build up. Many will die, and then some will sort of prevail, and then in hindsight, people will be like, of course, those were the main use cases of blockchain. So being in Cumberland Labs and seeing a lot of Web3 startups in their incubation phase, what are some of those synonyms that you're seeing, or what are some of the things that you think might stick as we move into the later years of blockchain?
So I think there's several different types of things that are happening in the world of blockchain. I mean, early on, we got into this phase of these ICOs and these token offerings and companies using tokens basically to sell. I don't want to say equity, but something that akin to equity. It's almost like a futures contract on the company, right? Where your token will be more valuable if the company does well or the protocol does well or something like that, right? So that is simultaneously a good and a bad. It's good because it allows you to access liquidity as a founder. It's not good because that liquidity is actually very expensive because if you think about it, your typical investor, your typical VC or somebody like that, when a VC invests in your company, they have a 4 or 8 year outlook on that investment, right? They know that it takes that long for any young company, any young product to mature, to become profitable, to have some kind of good outcome, right? Whereas your typical guy who's buying your token, Joe Schmo in Idaho or Indonesia or wherever, they don't have any 4-year outlook, right? They have a 2-month outlook. They're like, dude, this is either going to the moon or I'm selling, right? Mm-hmm. So as a result, your token is actually extremely volatile, right? So the majority of tokens out there, for typical projects are extremely volatile. And companies are not set up to deal with that, right? Your typical founder, lots of things are going wrong. If you're a founder, I can tell you all about the things that go wrong at startups. I'm sure you're familiar with some of those yourself. Fires are burning every day as you go home, and you can't deal with everything. Now you also have a token that is just going up and down, doing all kinds of crazy things, right? So. It's tough. Yes, you get liquidity, you get access to liquidity, but it's high. It comes with a price, and it's a price that not all founders, I think, are prepared for. So that a whole way of using blockchain to create tokens, I think we're going to be defining this in the next in sort of the next wave of this thing, sort of crypto adoption, right? Where adoption is going to come from is we expect it to come from solving typical use cases, right? Mm-hmm. It could be as simple as money transfer or payments. It could be other interesting things like establishing facts, right? Like there are these proof of attendance protocols and other kinds of things where you want to prove something that's online. With TrustApp, which is a project that we are very proud of that we just started, we are actually taking sort of tackling misinformation on the internet, right? So this is our counter to the problems exacerbated by AI, which is people say these things and you have no idea, is this real? Is it not real? Did they make it up? Are they lying? Are they misrepresenting some facts? Like, what's going on? So our approach there is we use blockchain to create permanent pieces of content that are publicly accessible. And then we give you a little tool, it's a browser extension. It's a little tool that'll put markers next to your social media post saying sort of red, green, or or gray, which means we don't know, right? And the biggest idea here is don't trust us, right? You don't have to believe our rating. Every time we rate something or we put a marker next to something, you can actually go check the NFT yourself. You can actually check that the fact that yes, this is real. The source is real. It's publicly available. You don't have to trust us, right? So it creates a way of this trustlessness. We want to bring it to the idea of preventing misinformation. That's and again, that's a typical example of the type of use cases that we expect to become popular, where blockchain is used not necessarily to create tokens that people trade, but instead used to create tokens that establish facts about the world that are then irrefutable and unchangeable.
No, that's a great example, Naveen. And I think you're right. There needs to be some way to align expectations when you increase that liquidity and you also break down the barriers of entry to investing. Now you're getting more people that previously couldn't invest because they didn't have $1 million. They had a small amount of money. In part, those old regulations were to keep people safe and protect their investment. But now people are throwing in $10 and expecting it to turn into $100 within 2 days. And they don't really have the financial attunement to understand that, yeah, a startup, especially founders and long-term investors, they have 5 to 10 or more year investment horizons, and Amazon wasn't built in a year, and it took them 10, 15 years for the revenues to start going exponential, and I think a lot of people, when they get into blockchain, they want to make it all right away. And I feel like when you do that, it's also really easy to lose a lot right away.
Absolutely. And I think what happens in these sort of crypto bull markets, when everything is just sort of going up and to the right, it's easy to start believing that your investment strategy is working. Whereas in reality, your investment strategy is buy any token, is all going up, So and people have outsized gains, which leads to further sort of them telling their friends, and everyone comes in and everyone's investing $100 and whatever, right? So, and now you invested in this token and it's a great product, but you're not looking at the revenue of the company or the potential of the product or the potential of that product to dominate the market or anything like that. You're just looking at what's my token doing? Is it going up or not? Is it going up? Is it down? Oh my God, it's down. Let's sell. Right. So it's a completely different type of game that people play. And for founders, like we have, I've met like 2 or 3 of these companies where they're like, look, we had a great 6 months and now we don't know what to do, because now our token is down massively and they have trouble now raising even venture money, because people are like, well, you have a bad reputation out there because your token is down. You're like, no, but actually it's a good product, So that's like those 2 things conflate with each other.
Yeah, it's a bit of a curse of the market, and in some part beyond the control of the company. When some of these companies, I'm sure you understand, there's a lot of blockchain projects that are still looking for a product market fit, or they haven't really found it. They're sort of a solution in search of a problem. But there are some that actually have great solutions and they are solving things. But when the market as a whole, if there's Bitcoin crashes and the rising tide rises all ships, but also sinks all ships, and how do you survive, as a startup? You've probably had experience with this personally, where you start your company right at the peak of excitement, and then all of a sudden there's 4 or 5 years where nobody wants to invest any capital, even though you have the next Uber in your hands.
So absolutely, I have experienced this myself a couple of times at least. Once in 2008 when that big crash happened, and once in 2014, 15 when sort of the fintech investments slow down. And what saves you as a startup is the fact that you have a good product that your customers love, right? And you're able to if I'm able to show to an investor or to a VC that look, it's a solid product. It has this potential. We're addressing this market. We have this customer. We have this customer growth. It's like I don't know if you've seen that. There's a talk that Paul Graham gave 9-10 years ago on like, should you have a startup or not? And one of the things he says is the most important thing in startup is to actually do good, right? If you're doing good, which means if you have a product that your customers love and you have traction, then you generally don't have trouble raising money. Valuations get tricky, right? So yes, you raise money at a $50 million valuation, and the market now just doesn't bear it. That's okay. You'll have a down round and raise money at a $20 million valuation or whatever, right? And that by itself, by the way, also is hugely problematic, because now you have to go start reissuing your stock options to employees and a number of other complications that happen. It's a bit of a red flag for future investors, but still, ultimately, you will survive and come out of it if you are actually doing good, if you actually have a product that works. But you have to hunker down. We at one point in one of my companies, we went from we sort of did a very radical pivot, and we went from having 110 employees to about 25 employees. Right? We just really hunkered down and said, what is the most important thing that we're doing? Can we just focus on that? You come up against hard times, and you have to make hard decisions. And ultimately, what matters is, do you have something that your customers love?
Yeah, great points, Naveen. And now to go back to the example that you gave of the new venture that you're working on with the TrustApp and AI, there's been discussion around fake content for a few years now, and I think the Tom Cruise deepfakes was one of the first example, but we haven't really seen it with everyday people. But in the last year, I've seen the technologies grow drastically with the expansion of ChatGPT into the video and audio, and it's starting to get to that point where your everyday person might be impersonated, or worse, political leaders, fake videos, images. I feel like this is something that is an ever more growing threat that I don't think anything like any global potential catastrophe has happened yet, but I feel like it very well could. And I'm curious on your insights into how serious of an issue you think this might be, and how important this technology could be for the future.
Absolutely. So I'll sort of add a little bit of historical context, and this is, I want to warn you, it's a little bit opinionated, but I'll put it out there anyways. So there was a time when sort of trust was very high. Let's just talk about the US, right? So in the 1970s was a time when trust in institutions was generally high. It was like, your news institutions or the government or whatever, right? And since the 1970s, no matter what your metric is, trust has been eroding in the US at least, and actually more recently all around the world, right? The different countries have different cultures, have different ways of establishing trust, and and even within the US, it was not universal, right? I actually lived in Georgia for a couple of years in the 90s, and they have a whole other system of establishing trust. And their level of distrust of the federal government is not new, right? So but trust was very high, and when people came to the internet in the 1990s, they sort of brought their trust with them, right? So the phrase was, well, it must be true. I read it on the internet. It was actually a true thing. Like, people actually said that in the 90s. It must be true. It's on a website, right? It must be true. It wasn't until the advent of user-generated content with MySpace and Facebook and these other things where really anyone could post anything, right? Again, the default is that people tend to believe things that they read, right? That's because they're bringing that from their sort of that's an overhang from a different time, from a different era where people tend to believe institutions. I think the place where we're getting to now is that people are now beginning to, or should, I think, adopt a very defensive posture, where you need to first start by not believing anything that you read. Yeah. So if you see a photo of whatever, it doesn't matter what it is, it doesn't matter who's posting it. Let's start by the assumption that's wrong, right? Let's start with the assumption that it is that someone's lying to us, and let's question their motives. Right. Then we have to gradually expand our circle of belief and say, who is it that we want to believe? What content do we want to believe? How will we decide what to believe or not? Right. So there's a few different initiatives that are trying to do that. So going back to your point about deep fakes and fake things. So Adobe has started a content authentication initiative. Where it's a consortium of many different companies, and the idea is that you want to be able to label original content in a way such that a consumer can decide. Of course, the problem is that most consumers aren't deciding. The consumers are just consuming content on social media, where there's no way of verifying it. Right. So with our effort with TrustApp, we're trying to address that head on, right? So we begin by saying, what is a very, very narrow slice of truth that we can get at, right? So let's not tackle, let's just tackle provenance, right? So you're saying that, look, guys, the New York Times is claiming that Israel bombed the hospital in Gaza. This is something that happened a couple of weeks ago. Well, let's just start with, is the New York Times actually saying that? Right. So at least when you browse your social media, we can just put little red marks next to everyone that's saying that New York Times is saying that, because the New York Times is not saying that. So that we can at least stop you from forwarding or retweeting or whatever those pieces of content that are clearly misrepresenting the sources, right? Whereas somebody else who says, yes, this is something that whoever the BBC is saying or CNN is saying or whatever, we can put a green thing saying, yes, they're accurately representing their sources, right? Let's just start. So we, from a product perspective, I'm a big believer in sort of taking small wins, right? You make something small and you get it right first before you start to go broader, right? So our first attempt is in establishing information provenance, right? Which is the idea that we can confirm that something, that a source that you're quoting did actually say the thing that you're quoting, right? Then we can talk about, well, you're not quoting a source, you're just saying something, right? How likely it is that what you're saying matches a number of other sources, right? How do we establish ground truth? So, for example, the CAI, the initiative that I just spoke about, they actually publish some tools, and we want to be able to use some tools to establish authenticity of content itself, right? And we want to use those tools to then add that to our little green and red check marks and say, yes, this is true according to the authenticity established here with the tool that Adobe created. Yes, this was actually photoshopped. Not, it has been photoshopped in a way that is not consistent with it being the truth or it being real, right? And we right now the CAI initiatives don't plug into blockchain, but we want to do that. So we believe that blockchain represents a sort of fundamental technology that allows you to establish facts in a way that is platform agnostic, in a way that is undeletable and unchangeable. And once you establish that, yes, this piece of content was published by this person at this time, that's it. Now they can't go and take it back. Or they can't, that cannot ever be deplatformed or whatever, like that's not but the whole point of blockchain is it's your own thing. And it's the public good in that sense, right? So we're trying to use blockchain as a public good in that sense, to be able to publish content that is accessible to everyone at all times.
Very interesting, Naveen. And you're right about the recent news, and it's hard to tell what's real and what's not. And there's so much information coming out. Even on YouTube and videos, there's like days and days of content every second that comes out. It's almost impossible to monitor the entire internet. I'm curious, how would you measure the attainable market size for this kind, like monitoring this kind of information and using AI to determine the authenticity?
So we are not, so we're trying to tackle small use cases and we're trying to empower users to protect themselves. That's really the attempt that we have right now, right? We want to give the user a tool by which they can protect themselves as they're browsing the internet. Is this information true or likely to be true or something like that? The market for that, empowering users, is as big as the number of users who browse the internet, right? But it's difficult to say what the what like what features we need to have to be able to attract more and more people, right? Because you can imagine that there's a class of user who's interested in establishing provenances, and a different class of user who's interested in finding deepfakes, a different class of user who's interested in something else, right? So we'll need to keep adding features to attract increasingly more users. In response to your question, which is, I think you were looking at from the other side, like there's so much content, how will you ever process everything? That's where I think that's where blockchain really begins to work, because it really opens us up to decentralization, right? I have zero hope that just as one entity or one company or one product, we'll be able to process all of the world's information, right? But our goal is to make to create a platform where lots of people are publishing content on the internet, are publishing content on chain, and that is again it's decentralized in the way that it is put on chain, which is really the only way that you solve a scale. You have tens of thousands or hundreds of thousands of entities that are putting content on chain. And the same thing when it is consumed. You have to consume it in ways so that it's not one single API, but it's served in a decentralized way, supported by blockchain. That decentralization actually becomes really important to achieve scale.
Okay, no, great point. And if I wanted to try this AI, is it already available for the everyday user?
Not yet. It's coming out at the end of this month. So we are planning a post Thanksgiving type release in early December, but before the holidays start.
Sounds great. And what other advice would you give to people that are trying to stay on top of blockchain news, AI, and all of this kind of technology?
I think they should read, listen to informed podcasts, but really look at what the AI experts are saying. I think the AI experts are there's a lot of concern around regulation and the potential of AI to do harm and these types of things. And I think those are very important issues, because if we regulate AI in wrong ways or in ways that prevent innovation, I think that's a recipe for bad things to happen, right? That's a recipe for protecting incumbents and bad things to happen. So it's very important for AI sort of research to be able to continue. And it's important for everyone to understand what the issues are, understand what generative AI is capable of doing, and what how these AIs differ from AIs of 10 years ago, for example, and what is it that it can do, that, and how can we market, for example, in a way that it's clear that this is AI generated. All of those things are important considerations in what's going to happen in the future, and it's important for everyone to stay informed.
Definitely. Well, thank you for all your insights, Naveen. And is there any place that we can follow you and your team's work for this kind of stuff?
At Cumberland Labs, our website, where we post all of our projects, and our Twitter handle as well, Cumberland Labs.
Sounds great. I can leave those links in the show notes as well. Appreciate your insights into all of this technology and innovation. Naveen, you're really on top of it, and it's going fast. It's sometimes it's a little hard to keep up.
Absolutely, absolutely. Happy to be here. Thank you so much for having me.
Appreciate it.